everyone and welcome to another Elliott Wave Forecast video all day. My name is Eric. Today is the 8th of August around 3 p.m. Eastern Times, and today we're gonna take a look at the yen as a currency. Within Elliott Wave Forecast, as we always say, we track over 100 instruments in a daily basis, and one of the reasons is that there always gonna be someone to tell you what the market can be doing in a specific group sector or overall performance. We look at the market as a whole. We cover 78 instruments in Elliott Wave Forecast, but there is a particular instrument that we don't cover in the regular basis, which is the SEKJPY. In Elliott Wave Forecast, like I say, we cover 78 instruments in most of the yen crosses, but we do not cover the SEK. That doesn't mean that we don't track the SEK. And the SEK is a very, very interesting yen cross. Why? Because the SEK is showing a bearish sequence from the peak here of 2014, and it is kind of providing the path for the yen crosses, and consequently, of the yen group within the next few months and even years. What we're gonna do is we're gonna explain in the sequence what a sequence in the video what a sequence means, right? And we believe that the market have a natural way to trade and to move, and many traders, they don't understand the nature of the market. Many traders are still looking either for fundamental stuff, or many traders still trading and looking for the old Elliott Wave way in which you have 1, 2, 3, 4, 5 ABC. The market move when correcting, which is the case in the SEK yen over here. It move either in a sequence of 3, 7, and 11. And in 11, a 7 wave sequence is translated to Elliott Wave as a WXY. I'm going to show you here what a WXY means in Elliott Wave for the new followers there. And the Elliott Wave Y is when the market does 1, 2, 3, 4, 5, 6, and 7. Very technical structure. This path right here is exactly what the SEK yen is doing. From 2014, you can see 1, 2, and 3 in black and blue over here. It's a middle degree. 3 swings in blue. 2014, 2015 April, June 2015, and November 2016. Then the market reacted in 3 ways also, and the market took the lows over here of the 2016. So the the bearish yen, in other words, the traders that buy the yen crosses, betting on the weak yen, fell the moment that the SEK yen took the lows of December or November 2016. So we have 1, 2, 3 in blue. It makes 1 red. If we look at the chart, 1, 2, 3 ABC. Right there makes the W in a highest degree. So technically, that's this is not Elliott Wave labeling. This is sequence. It's different for a clarification there. So this make a 1 red and a 2 red. Then we are trading now within the equivalent to the cycle of within the equivalent of this cycle is this cycle. They are equivalent in degree. And now the market will enter a bounce in this degree, which is a blue 2 right here. So this blue 2 is equal to this blue 2. This blue 1 is the one that we traded, but the blue one also comes in a sequence as an ABC. So technically, what we do in Elliott Wave, yes, we are in Elliott Wave servers. Yes, we do use Elliott Wave because our charts are going to be labeled this as a WXY. But we pay a lot of attention into our forecast and these type of sequences and extensions and this type of sequences and market correlation is an overall group of indicators that we use across the market to come out with the forecast. Now the SEK yen, and getting back to the SEK yen, it fell to a hold the November 2016 rally low, and the bulls fell. So now the SEK is trading over here within 3 weeks lower with the target that it comes over here at 1077.946. But what is interesting is how close are we on those targets in which the black one related to the black two is going to equal over here in this box. But important also is the idea that we're gonna get over here equal in price, but also we're gonna get equal in time. The black one, it took 236 week. Now over here the black 236 week is gonna be at a is gonna be here at a is gonna be on August the 21st. So doesn't need to bounce neither at this blue ball on an August or 31st. But what is interesting is that they are equal in times and they're gonna be equal in price within the end of the third quarter or sometimes early the next quarter. So the expectation is that the yen is gonna continue to be strong. The expectation is that the yen is gonna continue to be strong, and the expectation is that between August the 16th and over here on November the 1st, we're gonna see a period across the market in which the yen is gonna be weak. Now, based in Elliott Wave, you don't get this type of forecast. This is something else. This is what our members get in our live sessions every single day. That's what keep our members in the right side of the market. This is what Elliott Wave forecast is all about. This is not about 1, 2, 3, 4, 5 ABC. This is about relating the instrument even when we don't cover it, tracking the instruments and seeing the sequence and going for there into provide a forecast into the market. No matter what the yen cross, you look at it within the one that we close, that we cover in the daily basis, they all gonna trade the same pattern. So it's easy to forecast the market when you have these tools that we use in Elliott Wave Forecast. If you like the video, if you wanna know and learn more about these sequences, about this way to look the market, we have two very good choices for you. We have either a summer promotion that is ending soon, in which you get 50% off of the first plan, or all the plans for the first month, or you're gonna get a 14 days free of charge, free trial of the group of your choice. Join us, learn how the market moves. Join us, learn not to be in the wrong side of the market. With that being said, see you guys around with my videos about the market and these theories that these tools that we have added to the Elliott Wave theory in order to make it better. See you guys around. Have a good day.